the outset of the pandemic, there was a drop in IPO activity for a few months as everyone was trying to figure things out. And then after that, it was an amazing red hot market. And you really had the emergence of the SPAC vehicle facilitating a number of IPOs and very different. And as we head into 2022 and recent months experiencing market downturn, the number of consummated IPOs has decreased quite sharply. So I think a lot of folks have taken notice of that and are really curious, after such a bullish run of IPOs, where do we go from here?
With the slowdown in the IPO and SPAC market, definitely the enthusiasm for being IPO ready has slowed considerably. I see companies, that were actively working on their IPO readiness, working towards their first confidential S1 submission in the traditional IPO context, kind of put those plans on hold and shelve the active work on the registration statement. Many of those companies are continuing with their IPO readiness efforts, just at a slower pace. A SPAC is a special purpose acquisition company, also known as a blank check company. What it is it's a company that's formed by a SPAC sponsor to raise capital in the public markets and use that capital to find an acquisition target and do a business combination transaction with that acquisition target. The end result being that target is then a public company because they go public through the business combination with the SPAC that has already been listed.
Say for a SPAC, typically there is a stated industry sector or multiple industries or sectors of focus for that vehicle. For us at Jaws, and where we spend most of our time, particularly on the earlier stage in our private investments, we tend to focus in and around the consumer and technology sectors very broadly. I think as we look at the markets today on the technology front, it's really looking at companies that are supporting highly critical workflows or highly critical technologies. We think of that as workflow automation tools on the software side of the house. Cybersecurity continues to be an area of continually expanding budgets for enterprises of all sizes. And so those companies, we think, have a bit more durability in these volatile markets.
It's sort of widely known that, or commonly viewed, that there's a lot of what they call dry powder out there. A lot of private capital that is available for investment and not necessarily a shortage, although from time to time you open up the news and you see, pipe market has dried up. And some people may react to that thinking it's a drying of capital, but in fact, the capital's there. It's just not being deployed.
One word, volatility. So as you mentioned, there's a ton of dry powder out there. That gives us comfort. And it's a bit like I was talking about the Fed bailouts. It's like a magnitude of, every downturn, there's like 3 or 4x the amount of capital than there was previously. And that's good because that's there and it's ready to be deployed. And so the question you're asking is like, what would cause it to be deployed? And so my quick answer was around volatility. And I think until, if you think of I mentioned like SaaS companies before, that they were trading like 15 times revenue. Now they're trading at 8. 8's not so bad. In fact, it's comparably sort of not too far from averages. But nobody wants to invest in those if they think it's going to 5 or 4. And so it's kind of getting a sense of where the market is, where the bottom is, what's the new normal.